Good afternoon. This is Ken Long from Tortoise Capital with a regression line crossover case study for April 15th, 2013. The day began with the review of some of the fundamentals of the regression line crossover system. One of the traders in the chat room asked for some insights into ideas about entries. He was trying to go long in the green circle against the trend with a stop around the red circle, and he was taking some minor losses in here. And the point we wanted to reinforce was that in downtrends, you can see the big red arrows here. When price is pulled away out of the river and the Bollinger Band mean is sloping down, that's the direction of the primary trend. And now failures at the edge, the southern edge of the river, which is the plus or minus 1 Bollinger Band, period 30. These failures are really evidence that the downward trend is continuing or even accelerating, and that failures below the previous swing low of the ribbon, which is the 2-period Bollinger Band, are really moments of entry. So this move here at the start, this is the open on the 15th. Gap down, comes to the edge of the river and fails. That's a sign that the downtrend is continuing, and then a failure below this red line, which was the previous swing low of the ribbon, should be a short entry and not a long entry. And then this failure here at the edge of the river, I mean, the ribbon doesn't even get to the river. It's just that little spike unaccompanied by volume. That's a reinforcement. And so then we have another failure here, and so this is the big entry here. Getting short below this support level, when that cracks, you get a sharp downward move. And so failure through support levels are all entries on the short side. The previous day, now what we have is a sideways quiet channel. I just want you to see the difference. Now you've got the Bollinger Band mean, the red line is flat. You have both regression lines and the ribbon inside the river. Then a breakout from there is the signal to be going short. And that really, this first move down here, from the breakout of the SQC sideways quiet channel to the regression line crossover, is the first leg of what eventually started this thing failing downward, and which was reinforced by today. So that little quick case study got us back to reviewing some of the fundamental signals of the regression line crossover framework. Every one of these blue circles is a piece of information, a signal generator that gives us information about the nature of the trend. So we were working through this throughout the morning of April 15th, and by the time this spike occurred out of the sideways quiet channel, we were in a trade, but we were using this as a case study to understand the signals. One of those cases where the educational value was actually paying for itself, almost a scholarship from the market to study this framework. The trade that was associated with that particular setup was actually twofold. The first one was a regression line crossover, April 15th, 2013, a symbol UVXY. That's the double VIX ETF. And so on this one, what we had was a regression line crossover here, found support outside of the floodplain. So that's an extreme condition. When that reverses, then you get a regression line crossover here, and the ribbon entering. Our entry was at 6.30 with a 10-cent stop. It moves through the Bollinger Band mean, gets up to the far side of the river, and starts hesitating, and that's where we cash that, and that comes in at 0.8R. We're then stalking the re-entry or a failure here, and it pulls back to the Bollinger Band mean just like it's supposed to, finds support, takes off, and now we have the price and the ribbon and the 10 period all leaving the river here at like 6 in the second cycle, 6.42 with a 10-cent stop again below the Bollinger Band mean and below the swing low of the ribbon. What I really love about this one is it had been sideways, head fake south, cash a nice trade here, and now we've got two. We have a low and we have a higher low, and it's taken off leaving the river after a period of sideways motion. So the first entry at 6.42 takes right off. When it clears this hump over here, we got a 1.5 hour in hand. Get the second entry at 6.54, so a little over 1 hour in hand with momentum. That should read 0.1, and then it takes off and goes to 676. When it is moving up to 676, I take a snapshot of this one, and I was marking up this as a case study lesson, and had just placed my stop at 6.70, and about 2 or 3 minutes after this little surge, it came back and hit that stop at 670, and so on the two positions, that gives us a 4-hour trade. This is that 4-hour trade, and now we do the same thing. We're going to wait and see how far it comes back. Now this time it comes back just to the edge of the river and finds support. The ribbon doesn't even get to the river, one little spike down, and now it starts resuming. And now what we have is the price ribbon is rolling up, the 10 period is rolling over and rolling back up. The 30 period regression line never had even flinched, never looked back, and so we re-enter this, what we had just gotten out of, we get back in now at 6.69 with a 10-cent stop. Excuse me. As this is moving up in the floodplain now, and that's between 1 and 2 standard deviations above the Bollinger Band mean. You can see everything has left the river. This is the trending behavior. And it runs up to 6.96. So we're stock, and now then price pulled back. Now this is automatically time to start looking to lock in some gains here, because when that spike is unaccompanied by the Bollinger Band mean, that's an indication that this run may be done. And then shortly thereafter, we take the exit at 6.86. It had held for a while, still had money in hand. It found support of the river, and then right in here, it didn't look like it was going to take off, and in fact, it was rolling back over, and we're heading in into the lunch hour. And so this looked like after about this was probably a 5 or 6 hour day so far, and that's a really nice move in the volatility trade. And so in my view, it was either as we said here's an extract from the chat room, this is either an intraday turning point or a place where the next burst of volatility enters and takes off. My vote was that it was probably going to crash here, and so I decided to exit at 6.88 for 1.9 R. The next thing that happened is it came down, tested the bottom of the river, started taking back up. You can see the 30 has just barely dipped into the river and takes off again. So this looks like another buy on dip, and we stumbled into a whale on this one. So we get the re-entry here at 7.05 with a 10-cent initial stop. The second entry at 7.20, and then the news about the explosion in Boston, and I didn't even know what was going on, only that this had cleared this hump, and so I buy a third position at 7.40 with a 10-cent stop, and then 7.60 with a 10-cent stop. So now I'm all in, all 4 positions. It runs up to 8.20. Starts selling off at 8. I pull the trigger to exit. I got a pretty bad fill, 20-cent slippage on 4 positions, so we end up getting out at 7.80. But even so, even with a 8R dent from slippage, we end up pulling 19R out of that one. So that's probably like a 25 or 26R day, all things considered. And just attend to your craft, keep your tools sharpened and your risk and reward measured, and sometimes a whale will jump into your boat. So that's where we're at, and I'll be cash overnight, because who knows whether this is a continuation play or not. Gold is off 10% today, as silver more than that, and so the world is a strange and dangerous place, and I don't want to trade the overnight trade with 16 hours of a news cycle for shenanigans, so I'd rather be cash. And saying a prayer tonight for the folks in Boston. And Pandora's box is open. This is what the rest of the world looks like going forward. So remind your loved ones you love them, and take good care of yourself, and trust your neighbor. Live next to good neighbors and trust each other, and take good care. This is Ken Long from Tortoise Capital, and keep your risk measured and your powder dry.